Every single business has this long, kind of messy list of everything that happens financially. Sales you made, bills you paid, money you borrowed. Today, we're going to take all of that chaos and turn it into something crystal clear. We're talking about ledger posting. And yeah, we're diving in right now. I mean, think about it. It sounds like a pretty simple question, right? But if all you've got is a logbook that just lists things in the order they happened, well, finding that one number means you're frantically flipping through pages, trying to do math in your head. There's gotta be a better way. And trust me, there is. So here's our game plan. First, we'll talk about why just using a logbook is a problem. Then, we're gonna meet our secret weapon for organizing, the T account. After that, we'll actually walk through the process of posting, find that final answer we're looking for, and then, this is the important part, we'll see how this all helps you make real decisions. Okay, so let's start with that logbook. In accounting, we call it the journal. And look, it's absolutely essential. You need it to capture every single thing as it happens. But here's the catch. It's fantastic for recording, but it is awful for summarizing. And this is really the key difference. Your journal, that's your diary. It tells you the whole story of what went down on April 14th. But the ledger, that's the master record. It doesn't care about the story, it just wants to know the final score. It answers that big question. How much cash do I actually have right now? So think of it like this. The journal is the messy diary, and the ledger is a bunch of perfectly organized sorting bins. So, how do we actually make these sorting bins? Well, we use this brilliantly simple little tool. It's time to meet the T account. This is our organizer, and it's going to help us literally see what's going on inside that master record, the general ledger. And here it is. Seriously, it's called a T account just because, well, it looks like a capital T. But here's what's so powerful about its structure. The left side is for debits, and the right side is for credits. Now, don't get hung up on those words. For an account like cash, it's super intuitive. Debits on the left mean increases, cash coming in. Credits on the right mean decreases, cash going out. It's just a super clean way to track the ins and outs. All right, now we get to the action. Posting. I know it sounds like some technical, boring term, but it's really just a fancy word for transferring. All we're doing is moving our numbers from that messy diary into our nice, clean sorting bins, our T accounts. And the process is actually just 3 simple steps. First, you just open up a T account for every single thing you need to track, cash, supplies, rent, whatever. Second, you literally just transfer the dollar amount from your journal over to the right T account. And third, and this is the most important part, you maintain the side. This brings us to the absolute golden rule of posting. If an amount was a debit in your journal, it has to be a debit in your T account. If it was a credit in your journal, it stays a credit. That's it. That's the whole rule. You just stay on the same side of the T. Simple. Okay, so we've done all the organizing work. Now it's time for the payoff. We're going to take that jumble of different transactions and turn it into the single, powerful number we've been looking for all along, the final account balance. Let's make this real with a quick example. So imagine these 3 things happened with your cash this week. You started with $1,000, you paid $200 for rent, and you made a $500 sale. Let's post these to our cash T account. So check out how this works. That starting $1,000, that was a debit, so it goes on the left. The $500 we earned from the sale, that's more cash coming in, so it's another debit. It joins the $1,000 on the left side. And that $200 for rent, that was cash going out, a credit, so it goes all by itself over on the right. See that? The chaos is sorted. Now for the easy part, I promise. To get our final balance, we just do some really simple math. First, add up everything on the left, the debit side. Second, add up everything on the right, the credit side. And last, you just subtract the smaller number from the bigger number. So let's do it. On our debit side, 1,000 plus 500 gives us a total of $1,500. Easy enough. On the credit side, we've just got that one item for a total of $200. Okay, we're all set for that final step. And there it is. $1,500 minus $200 gives us our answer, an ending balance of $1,300. That's it. That is how much cash we have right now. No more guessing, no more scanning through pages, just one clear, confident number. So why did we just go through all that? I mean, why bother? Because having organized data isn't the point. The point is being able to use that data to make smart decisions. Let's go back to that real-world business question. Hey, can we afford to buy this new piece of equipment today? Without posting, you'd be digging through your journal, trying to add and subtract in your head, and just hoping you got it right. But with the ledger, you just glance at your Cash T account balance, you see that $1,300, and you've got your answer instantly. And that right there is the power of the ledger. It gives you an instant, up-to-the-minute total for every single one of your accounts. It takes your messy diary and turns it into an organized dashboard for your business. And as a bonus, it gets you perfectly set up for the next big step in accounting, creating a trial balance. If you take away just one thing from all this, let it be this. Journaling is for recording. Posting is for sorting. One is for writing down the story, the other is for telling you the score. So, your accounts are finally sorted. You have a clear balance for everything. That's awesome. But here's a final thought. With all of that moving and adding and subtracting, how can you be 100% sure that your math is right? How do you know that everything is truly in balance? Well, that's a great question, and it's exactly what we're going to cover next time.